Well, welcome to our Thursday Crypto Answered show. We do this every Thursday here, recorded on Twitter Spaces, but then we're also with a new partnership we have with PennyFly Entertainment. We are also going to be releasing these recordings about a day and a half, 2 days after this through all the major podcast networks. So thank you, everybody, for tuning in here. Thank you to my partnership with PennyFly Entertainment. We got a lot of great guests that have been on the show, and I'm happy to say today we've got it's another one for the books. We got some really great guests lined up, including one of the YouTubers that was one of the first people I watched when I first was really trying to learn about technical analysis, Mr. Sammy Loyal, formerly Four Flies. So I'm really happy to have him on. We're going to be introducing all these folks and giving you all their details so you can make sure. And please do every single one of these speakers, these guests, the service, and just the love of just at least checking out their profiles, because every one of these people put so much time and energy into sharing a wealth. I'm talking about a wealth of knowledge through all their different socials, through their private channels, through all the different services that they provide, both free and paid. It's all very worth checking into. So before we dive in and just get started, I want to first introduce my co-host, who's basically my ride or die partner here in crypto and also in life, a really good friend, Mr. CryptoVet. How you doing, sir?
Man, I'm doing great, Kelly. Thanks for the introduction. I said I wish I could participate more in this week's early one, but I actually am flying out here in about an hour and a half, so I'll definitely be listening in. Super happy to have Michael, Sammy, Plan C, and Root here as always. So, no, I'm just excited to see what everyone has to say. The market's kind of, a lot of people are thinking this is a little bit of a bull trap. So, I want to see what other people have to say, and I'm excited. Thanks for always having me here, Kelly.
Oh, absolutely. Thank you for the love and support. And just for anybody that's tuning in, wherever you're tuning in from, this is being recorded on Thursday, July the 7th. If you don't want to catch us live, we also do we try to work in a little bit of an AMA towards the end of every show. It doesn't always happen because sometimes there's just too many years worth of data points that we need to try to cram into an hour and a half. So sometimes we don't get to that, but we really try. But again, my name's Kelly Kellam. Thank you for joining us here on Crypto Answered. You can find my info at Kelly Kellam, which is at KELOYKELLAM. And then our first guest I want to introduce tonight, or today, I should say, is Michael Vanderpope, who has been in the space for quite a long time. And you may or may not have caught him on he did a thing with one of my other team members, Crypto Jeb, earlier on the Cointelegraph. A really great conversation. I'm actually going to ask him some questions about some of the stuff that he did there. But you can follow him on. He's got a number of different socials that you can follow him through. I just lost my sheet, but you can follow him at Crypto Mitch, which is MICHNL. And also he's got a number of great things. He's also the CEO of 8 Global, as well as he's got a number of different things you can check out. But how are you doing, Mr. Michael Vanderpope? How's life? How are you feeling?
Yeah, thanks for the introduction and for the invite, man. I'm doing wonderful here in Amsterdam. It's a little bit packed in the Netherlands with farmers protesting, but further I'm doing quite okay. It's running up a little bit, so it's good right now.
Oh, that's great, and I'm happy to have on this show just sort of coincidence of timing. For people that are here, regular listeners, we've got quite a big group of people that have tuned in regularly. You might notice that we usually do this live show at 7 p.m. Eastern Standard Time, but we discussed it, CryptoVet and I, and we want to make sure we give equal access to people around the globe. That includes speakers as well as people that are tuning in just to listen, so it's not in the middle of the night for them. We're trying to do a 2 p.m. show about once a month, and we just so happen to have another one of our guests that's been on here a number of times, who I believe right now is also in the Netherlands, Mr. The Rational Root, or also known on here as Root, and he's got, I'm talking about a wealth of on-chain data analytics, as well as just a great grasp on the market. You can find him through his socials at The Rational Root. How you doing, good sir?
Thank you so much, Kelly, for having me on again. It's always a pleasure to be here. You've always great. So I really enjoy these talks. Indeed, I'm in the Netherlands this time. Before I was in Mexico for some time, so I was able to make the 7 p.m. shows. Now that's a little more difficult as it's night here.
Well, we're happy to have you back, and there's so many. It's one of the things I think newer people don't understand when they first get into the space. They might follow one talking head or one analyst or one YouTube channel or one Twitter profile, and they see a pattern or they see a projection. I think that's the answer. And the longer you're in this, you start to notice that every projection has some sort of bias in it. And so it's great, and that's one of the reasons why I love doing these panels here on Crypto Answered, is because I like to get people that look at the market through different signals, whether it's on-chain data, whether it's general global traditional finance mixed with crypto market analysis, or if it's purely technical analysis, like one of our residents who's not on today, Jesse Olson. But it's good to have a more balanced approach and have dissenting and differing opinions and different ideas about what's going on. With that, I want to introduce somebody that I've been following for a long time, and I think that he's got such a cut and dry, as much of an unbiased view on the market and his analysis of amongst many of the YouTubers that I've seen over the years. That's Mr. Sammy Loyal. And you can follow him through his Twitter, through his socials, at Sammy Loyal with an underscore at the end. I'm super excited to have him on. How you doing, Sammy? I know you're in the middle of a 6-hour road trip across the desert,
on,
probably
man?
somewhere.
Yeah, doing well. Hey, sorry, connection's a little bit weird. We're just somewhere out in Italy on a road trip and just chilling, watching the market, trying to make that second break, trying to climb above that 22K level, see if we can have a bit of sunshine.
Yeah, right. And for anybody that's being troubled by the market right now, sometimes, and every one of these guys have said it in their own words in some way at some point, sometimes the best thing to do is nothing at all in terms of entering a trade or exiting a trade. And right now, if you're confused about what's going on, and really anytime you're confused and not confident, you really shouldn't be putting an entry or an exit unless you're confident about that decision. So hopefully we can clear up some of those questions or give a little bit of a guiding light, or just help anybody think about something in a different way than they have before. And that's the whole point here. So with the last person we're going to be introducing here is one of my favorite on-chain analysts and dear friend of mine. He's been with us for several months now here on the show, and he's just such a wonderful guy, Mr. Plan C. And you can find him at The Real Plan C. And I think he's going to be having to jump off after a little while, so we're going to get him on a bit early. How you doing, Plan C?
Yeah, doing great, Kelly. How's glad to be here. And basically I just the last week I was just on a bit of a trip, and so just got back this morning. But just trying to stay connected to the markets as much as possible, and looking forward to hearing what everyone has to say.
Right on. Well, let's get started. And again, for anybody that's just tuning in, you're listening to Crypto Answered. We do this every Thursday. So thank you for tuning in. And everybody, like I said, I'm going to say one more time, expand this window if you're on mobile or if you're on your computer. We're going to be sharing some charts across the top where you can sort of scroll through some of the recent tweets or some of the recent thoughts that these various different guests have shared, and that might help you just sort of put an image to exactly what they're talking about. But we really appreciate everybody being here. And with that, we'll just jump right in. Mr. Michael, I wanted to start, clearly the market has, obviously clearly been in a downtrend now since about November. But you said something very interesting on the interview you did earlier with Crypto Jeb, and I wanted to sort of expand on it, have you expand on it a bit, because it's something we've kind of talked in some regard to here on the show. And that is the very interesting bull market that we were in 2021, where we had a peak around 64,000. We pulled back, and then although there was, in all other senses of the word, of the sort of analysis, actually more of a bear market sort of setup, we hit a new all-time high. And you pointed very clearly in your interview earlier about really right now we're having this contagion in the market where everything's crashing because of over-leveraged accounts. Basically poor risk management on the behalf of many, many institutions. And you sort of posited that even the run that we had in 2021 was sort of, I don't want to say accelerated, but sort of exponentially sort of made things overvalued because of the nature of a lot of these institutions pouring far too much leverage into the markets. And of course, when those things come collapsing down, we revert very violently back to a more of a almost below fair value, but very aggressively back to the mean. So I'm just curious if you can expand on that a little bit and what your thoughts are about where we're at.
Yeah, well, I mean, you can question the last bull market. There are several topics on that. Like, you can question the past bull market of 2021, and you can question whether it's comparable to the one in 2017, and whether we could be having such a run if we didn't have all the leverage in the markets as we had last year. So, in the aftermath of the current markets, we can see that the run of 2021 was actually pushed forward by leverage positions on a few funds. So 3AC had a big position which was leveraged. Celsius did the exact same. And due to that, we also saw the Bitcoin and Ether were going downhill quite fast in the past weeks, and even were falling further than what the altcoins have been doing because of those leverage positions being primarily into Bitcoin and ETH as a collateral. So as a conclusion from that perspective, we could say that, okay, are we actually seeing a shorter bull cycle in which we were seeing an all-time high in 2021 during the summer? Or did we actually see an expansion in the bull cycle, which shouldn't be there if we didn't have such a leverage position through DeFi, which also means that if we have been seeing that expansion, we would also not be going so far down as we have right now. And yes, for sure, we were into a bear market, we were correcting, macroeconomics were not great, the Fed had to step in. But if we look at the equities, they were not dropping down that much. They are approximately down like 20 to 30%. And crypto has been cascading even further due to the fact that Luna and internal shocks have been pushing the prices down some more. So in that stand, I think that right now the markets are undervalued like crazy, and maybe even the cheapest as they have been ever. And I'm also not a big fan of the thesis that we're going into a multi-year bear market. I think that the thesis of having a crash like the Corona crash in 2020 is more comparable to the current state than having a multi-year bear market based on the fact that leverage positions are currently out of it and have been pushing the markets down.
No, I totally agree with you there. And of course, I think this sort of downturn has brought to light a bit more of the bias that I had unknowingly, and I think that's something that all of us need to we need to be okay with being adaptable and acknowledging when we're wrong or when we didn't take in enough data points. And so I have in this case been outlining. I don't want to say more aggressive, but I've been outlining more realistically potential downsides, even though I do still think we're going to resolve to the upside. But I think it's a good risk management to identify what the path is alternate to where you feel it may be going, so you can plan accordingly. And so with that being said, I want to throw it to Sammy because you had also said, Michael, and I'm curious what Sammy's thoughts are on this, because I think I agree with this. Because we got to a point where we're so undervalued on technical levels, when you look at on chain, when you look at all these things, of course, those are relative to periods in the market where we've never really been facing this huge economic, geopolitical sort of bearish pressure on the market. So are we undervalued, or is it just that we're valued? The technical levels are being hit, in a way that's not relative to things that were measured in the past. So if we do push up from here, we have no sort of VPVR, real sort of trading activity between basically about $22,000 to $28,000. And so if we do push up, it's very likely that if we do pull back from that we could actually find support on the 200-day or 200-week moving average. I'm curious, just through any of that and just in general, Sammy, what you're seeing and how you're feeling the likelihood of where we're going in the next 3 months.
Yeah, man, that's a lot of questions loaded in there. I want to start with the "Are we undervalued?" question. It's a big one. I know Bitcoiners love to entertain it. My opinion on this, unfortunately, is that the price of Bitcoin that we're currently at any given moment in time is the correct price, and that's the value of a Bitcoin. At the end of the day, it's just a very speculative market. So when people are scared, it has a lower perceived value, and people sell it. And that's and so I don't like to entertain like what kind of value, or are we undervalued or anything like. Yeah, I just think it's we have to stay grounded in remembering that this is a very, very speculative market. So if Bitcoin crashes from $69,000 to $17,000, does that mean that it became 70% worse in those few months? I think all of us would say no. It just keeps getting better as a piece of tech every day. As for as you mentioned, like resistance up ahead and so on. I'm looking to see, as Michael was saying, what's going on with the leverage market. If we start to see a lot of short positions piling in, we can start seeing some long squeezes, and then we get pushed to the upside. Obviously, we're so ridiculously oversold in so many ways that it just makes sense to expect a pullback. Fear and greed levels are rock bottom. RSI levels, I think, on like the monthly time frames have never been lower. I might be wrong about that, but we've done a lot of firsts in terms of the first time we've done something that's horrendously bearish, and just to expect some sort of relief off that, to me. I think a lot of this is contingent on what happens to the dollar. This is the only reason I don't have as much confidence as I usually have in what I'm saying, is because we right now are, I feel, at the mercy of what goes on in traditional markets, and traditional markets are at the mercy of what happens with the dollar. It's very interesting to see how hooking up money from assets and indices and so on. Gold, S&P 500, Bitcoin being some very easy examples. At the very same time, other currencies that the dollar is compared to, the dollar index, like the euro, pound, Japanese yen, Swiss franc, and so on, all losing value against the dollar. And I think that's an extra dimension that don't consider in your analysis now. You're going to be taking blind shots. It's hard to say where the dollar is, but I think from what I've seen, we are potentially at some resistance levels. So if the index starts to drop a little bit, then it might lead to more of a rally for Bitcoin. And yeah, between $22,000 to $28,000, I don't really see any breakout the same way that we just crashed through the floor. There was no support on the way down, so I can't anticipate much resistance on the way up either.
Oh, it's such a good thing to point out. The Dixie as well. Looking at all the other currencies as well, but the Dixie kind of taking the run of show, if you will, right now. But with all that being said, I want to throw it to Plan C, and just get your thoughts on what you're seeing, or if anything's jumping out on a bunch of the metrics that you've been releasing lately, or if you're seeing anything even in TA, in what's going on with the market right now.
Yeah, for sure. So I am working on quite a long thread that's going to be probably about 50 charts, and it's going to be, or it is essentially all the what I feel are like some of the best on-chain metrics for the macro, kind of like determining the macro bottoms, at least historically speaking, kind of where we've been with TA and then on-chain. But yeah, having said that, I mean, it's really not. It's pretty clear, like has already been previously stated, that we are at that really oversold level on so many different metrics. But yeah, it just remains to be seen when the bottom's put in, based on, in my opinion, based on really what's going on in the crypto lending and borrowing space, the mining as well. But just understanding what's going to happen with all these crypto lending companies, if any of them are going to get completely liquidated, that would create quite a bit of sell pressure. Some of them do have quite big stacks of Bitcoin and ETH. So yeah, I'm really following in depth what's going on. I'm very involved with different people that are putting in proposals and trying to help out, specifically Celsius. I did a call with Simon Dixon the other day, was just to give you guys an idea of like how many people are involved and potentially affected by this. I mean, and worried about the situation with Celsius. There was 35,000 people that actually listened to our Twitter Spaces, and we went for over 3 hours. So yeah, there's just a lot of nervous investors wondering, what's going to happen. Obviously there's the Voyager situation now as well. So we just don't know the forced selling that could occur from Celsius, Voyager, potentially some other people as well. Excuse me, as well. So there's definitely that. And then also the macro situation. I mean, I'm not qualified to speak really that much on that, but I definitely know, obviously, like everyone else, that it's a big factor here. So yeah, we're definitely oversold. That's pretty clear on TA and on chain. But until we get some resolution, until the crypto essentially contagion is more clear that it's somewhat ending, or at least like there's some resolution to that. I'm not really confident to say like we're for sure, the bottom's in, anything like that. And same with macro. I think we just got to wait and kind of see how this resolves between crypto contagion and then the macro. That's just really how I'm seeing it. So yeah, pretty much all I had to say there.
No, I mean, I think that's great, and I think we brought this up on one of the shows. I mean, it must have been 2 months ago or something, regarding the second top that we had in 2021. It wasn't like we had some massive amount of new interest in the space that drove the price up. What it really, looking at especially a lot of the on-chain data, and the money that was moving into and out of the market in terms of Bitcoin, really. That pump up to 68, 69,000 was really more relative to the strength of holding with the small amount of new money coming in. So with that being said, I want to throw it to Root here, because you do such great work with all the different metrics you bring up. I'm curious right now, and Michael Vanderpoop pointed this out also on the interview earlier with Crypto Jeb, regarding the fact that and you just brought it up as well, Plan C, that these drops, it's curious that, of course there's going to be some strong hands and, retail and weak hands selling in these drops, but it really boils back down, it seems like, to a lot of the forced selling from, liquidations as it went down with these massively over leveraged institutional and large big money players. So I'm curious, Root, is there any sort of change in dynamic right now that you're seeing on chain with respect to like midterm or long-term holders in terms of the change in their strength level, or capitulation or sells or strengthening, whatever you're seeing in that regard?
Yeah, so maybe I should post a chart about capitalization for long-term holders and short-term holders. I'll post it in your tweet about this spaces in a little bit. But to answer the question, so yeah, long-term holders actually were capitulating for the first time really on the drop of June 18th. So before we had this long-term holder rally basically to 69K, and after the price started dropping, but long-term holders still had this conviction, that price will maybe not see these lows. And so really the big drop that we had on June 18th, that really caused some panic with also the long-term holders. So that was actually the first sign where we really saw some long-term holder capitulation. And so I actually think it's a good thing as well. I mean, it's good to get rid of weak hands, obviously. So to make a bottom in a bear market, also long-term holders need to capitulate, right? So this is necessary for a cleanse. And I think we had that event. Now I'm not sure if we're done capitulating. Maybe also, long-term holders normally tend to capitulate a bit also when we stay at these lower levels for a long period of time. So they get a bit tired and bored, let's say, and they capitulate for those kind of reasons. So that still might happen. But I do think we're comparing cycles. I mean, we're actually back on track with the 4-year cycle again, which is just kind of funny, because everyone started rejecting it, right? That this time is different, but here we are again, perfectly aligned with the 4-year cycle, and we didn't get the highs we wanted. Everyone wanted 100K, that didn't happen, so that was kind of disappointing, and that's, I guess, also why we had this long-term holder run, because everyone was still expecting this 100K to happen, and it didn't come. Now yeah, we are really making a bear bottom, and it's hard to tell when the exact bottom will hit. Nobody can predict it really. Many on-chain indicators are actually saying that we are more or less around this bottom. We could perhaps still go a little lower, and I gave some insights on that. I think 13K is in the cards. Like that would kind of be my worst case scenario, let's say. I don't think we'll go much lower because there seems to be quite a bit of support, around those levels, and so that is still for me in the cards. But perhaps we already had the bottom on June 18 because these types of events where we have this peak fear, you saw the fear greed index pointing like really the lows. We were at 6 or something on a fear greed index. Like these events don't happen often. And so I think we had these huge capitulation, actually two spikes of capitulation in the past month. So that is actually a rare event, and so to me that kind of is an indication that we might have had potentially a bottom. Now could we drop a little lower? Just anything is possible, and so therefore I kind of try to be conservative now and say, okay, maybe we'll go to 13K, and I would say that can even happen before Christmas. Like in the next months. Let's say it doesn't have to happen even now in the next week. We could have a revisit maybe later on this year. But I think there's also a good chance that we just that we might even have had the bottom, and that we stay in this kind of range between 17 and 24K for quite some time, actually, maybe a few months. That we just because I also don't expect that we're really going to have a huge rally anytime soon. I don't think that's really likely because hype is out of the market. There's not a lot of new now. There are actually a lot of people that are kind of bit on the sidelines, like, should I step in? Should I not step in? So sure, we could have a small rally, but I don't think we'll have like a huge rally anytime soon. I think it's more likely that we just kind of consolidate and we regain our strengths. And maybe I expect by Christmas next year for things to kind of get better again. So that's kind of my take.
No, I mean, absolutely. And just to point out, I think CryptoVet shared it. It's up in the very top. But I have a sort of market cycle trading cheat sheet that I posted months ago. And one of the things that I think people are forgetting, and you just pointed it out clearly, Root, is that in order for any sort of healthy bull run that we will have eventually, and I do think we absolutely will have one eventually, to do that healthily, we need to build the first floor of the house. In order to do that, so the house doesn't fall over, you have to have an accumulation period, and that's some sort of sideways action. And for anybody that's been in this game, that's been in these markets, it's crypto especially for a few years, you'll remember in 2018 that there was, among the most boring times in crypto that I can remember, where it was just sideways for months and months, and then everybody thought that was the accumulation phase. And then the market got very bullish because they were expecting the breakout. And what did we do? It dropped by half and then had the accumulation phase before we went up. But I want to throw it to Sammy here because you have such a great grasp on TA. I'm just curious, looking right now, because so many people, there are Bitcoin maxis out there, yes, but there's a lot of people out there, especially newer people. I feel like the majority of new people start with this altcoin sort of hype, thinking that they're going to get rich and catch up to people that got in early. But not to say that altcoins are not to say that altcoins are bad, but looking at the markets right now, what would you say in terms of protecting good risk management when they're looking at these different alts and Bitcoin? How would you relate to them? What would be your thoughts right now as the market's so flat?
Alts are great when the market is.
Oh, you're kind of cutting in and out, brother.
Just on a highway because of the delays I told you about earlier today. I think it should be better now. When the market is optimistic for Bitcoin and so on, money starts getting flooded into the smaller coins. It's very much the same thing where in traditional markets you start feeling a little bit excited. So You put it into individual stocks, and you make money from that. You get a little bit more greedy. You get a little bit more of a bigger head, a bigger ego. So you take even riskier investments, and that's kind of where that's how altcoins. That's the position that altcoins have in the crypto market. And obviously it just gets very diehard because they can really explode by quite a bit. But just before I talk about that a little bit more, you were talking about the bottom and the accumulation and so on. One of my strong opinions on a potential crypto bottom is that if we are indeed going to be setting a bottom anytime soon, or if we already have set one, the way that I would generally expect the bottom to form is that we kind of like really spike down to something quite ridiculously low and then spike right back up very quickly. And so a great example is the Black Swan March coronavirus 2020 crash, kind of like 10K down to 3 and then back up to 7 within, a very short space of time. And that's something which, is quite clearly a market bottom. Something perhaps a little bit softer would have been what we had at the end of 2018, beginning of 2019, where we bottomed out at 30.50 and then 31.50. We've kind of done something similar to that right now, but I'm not confident that the bottom is in for a couple of reasons. The first one is that this is the first time on a potentially macro scale that we've actually plunged below our previous all-time high. We did do this previously back in like 2011, but it was almost like a mini bear market. It wasn't quite the same as what we're looking at right now. And we also, as I said earlier, are potentially, I feel strongly, very much at the mercy of what happens in the markets. And I just don't think that they've fallen down to significant enough support levels, given how bloody this has been. I just don't see that we get massacres in these markets and then we bounce off mediocre support levels and that's the bottom. I just don't believe that's going to be the case. I don't think 17K is significant enough. You could call it a deviation below the previous all-time high. I think that's being generous. I think that that there is still some space to drop lower, if you guys have seen the Wall Street cheat sheet, the psychology thing, this is the kind of stuff I like to stick to. Is just technicals and psychology. You got a lot of suckers rallies at the end, and that's the thing where the market's now had its big run up, it's had its big drop down, and then you form a series of rallies that. Some people are really holding their breath that this might be the one that sets new all-time highs and gets them the financial freedom that they dreamt of. But most people say this isn't going to work. This is a suckers rally. And the catch and almost the hidden thing that you never really get when you look at that picture is that you actually will produce a lot of suckers rallies until you have the real new bull market. And a great example again was 2019. We kind of fed into that pump up to $14,000. That was a beautiful suckers rally. It was absolutely textbook. And then we continued on with the bear market. Then moving back to altcoins. Bottom line, when you have speculative markets, people speculate because they want to make money. When you can't make money, i.e. when it's dropping, people are not interested. So, you're talking about illiquid markets. You're talking about markets that are much more subject to manipulation. Altcoins are a horrible idea across the board in a bear market. You could probably play some rallies and pull your 20, 40%, maybe you even leverage it up and get some nice gains there. But for the most part, it's really bad. It's a really bad risk profile, in my opinion, to be trading altcoins in a market like that, unless you're just going short. So that's my take on each of those things there.
Well, I went ahead and shared because it's a beautiful reminder for everybody. I went ahead and shared a tweet from Crypto Joey that has the Wall Street cheat sheet. Where would you think that we are within that right now? Would you think that we're in the end of the panic stage, or you think we're past anger towards depression? Where would you think that we are on that?
The thing is, I can't remember who said this earlier, but I'm not totally subscribing to this like multi-year bear market hypothesis, and this chart implies that we are in one of them. The thing is with our I don't even want to call it a bubble pop. I don't think we even had that, but with our bubble pop, so to speak, where we hit the all-time high, we weren't as extreme as this. One of the big hallmark signs of being essentially one of the market cycles that this cheat sheet shows is that you have extreme volatility at the very top. Where, for example, last time in 2017, we rallied from basically I mean, almost nonstop from $3,000 to $20,000. And when we, for example, when we hit, I think like 17, we dropped down to 10. When we hit 20, we again perhaps dropped somewhere down to 10, or I mean, very low. It was, I mean, we were seeing like big 30, 40, close to maybe even 50% swings in one day, or in a very short space of time in one leg. That didn't happen at this market top. I mean, it was pretty much just a really painful, slow grind down. You know, I mean, we didn't get extreme reactions, so I don't even think this really applies. And for that reason, I've never been able to place where we are on this chart, because we just didn't get we just didn't get your standard like bubble pop, like extreme euphoria feeding into extreme despair type. It was a very slow transition, I felt, at least. You know, nothing like 2017, 2018, where you knew within a few months, like we were down bad. You know, I mean, anyone paying attention would have known this by February, only 2 months in. But you know, we just didn't have that same situation here. So while I do use this to explain what a suckers rally might look like, that disbelief rally, I just don't think you can place where we are on this chart.
Oh yeah, no, that totally makes sense. And you know, this exactly everything you just pointed out is one of the reasons why I think that I mean, and I forget myself, you know, I haven't been in this for years, that the market does everything it can to shake as many people out as it can. And the funny thing is, it doesn't actually do that. The market is its own beast, it's its own organism. And sometimes we feel like it's doing this to shake people out. In reality, it's adapting and adjusting to all the new market stimulus that's happening on a daily basis. And whether or not we can read that appropriately or plan for it is kind of irrelevant. It all comes back to risk management, right? But with that mid-cycle, you know, almost double top, I continuously, and maybe it still is the case, I felt like it was still a midterm, you know, sort of a mid bull cycle correction. And I just did not expect it to break as far down as it did. And I think that's what's really shaken a lot of the bulls' confidence in what's happening right now.
Well, yeah, I mean, the thing is, you know, if some bullish sentiment returns, I mean, things turn around really quickly for Bitcoin. You know, I mean, all you need, and by the way, similar to what you were saying with the second big rally we had up to $69,000, it wasn't a lot of people buying Bitcoin. It was just nobody selling Bitcoin, right? So, I mean, you know, if you have a market where there's just not a lot of trading taking place, the last traded price can just keep going up, and that happens when there's excitement. So I'm not worried about Bitcoin, you know, rallying back up to very, very high levels. I mean, all it is a case of you break one resistance level and you jump up to the next one. So in this case, 22 to 28, 28 to, I mean, there's a lot of resistance between 28 and 40. But, you know, I mean, you know, you jump these levels and it gets better. You know, so I'm not even too worried about that. And I did put a lot of weight towards this potential, you know, theory, you could say, that we're in more of a kind of like mid-cycle correction and then we carry on. And I really like it. I really like how that sounds. I think that people are perhaps, you know, I mean, just looking at the fear and greed index again, I really fall back to that one a lot, because it's so ridiculously low and it has been for so long. You know, it does make me wonder if this is one of those mid-cycle corrections. But again, I really want to make sure that we're giving enough credit to what's happening in traditional markets and where those much larger sums of money are flowing around, because I think we are. I mean, at the end of the day, again, if it's a speculative market, but nobody wants to take risks, you know, I mean, where do we stand? You know, I mean, if everyone's risk off, if nobody wants to, you know, I mean, people are going into the dollar, for God's sake, so it doesn't even make sense. You know, I just don't see why, you know, that spec. It puts us in a really tricky situation, man.
No, absolutely. And I want to throw it to Michael now, because you know there's so you have a wonderful grasp on just the broader economy at large, and of course all of us in crypto. I feel like honestly, being involved in Bitcoin and crypto has brought a lot of people's awareness to just finance in general and traditional markets. And you know, I never gave two hoots about what the Fed was doing or one thing or another. But in the last 4 years, of course, my lens has shifted, my priorities and what I'm paying attention to. But what are your thoughts? What are your thoughts, Michael, on what's happening right now. We've been very hawkish lately. We've had a lot of they've done a necessary thing, which actually is still not enough, but that's raising interest rates. And what are your thoughts going into the huge reports that are coming out on the 13th, potential obviously more rate hikes. We're also in a midterm election cycle here in the U.S. What are your thoughts about what's happening with the Fed and all these different policies going into the next month? What's your sort of forecast there?
Well, if you look at the behavior of the Fed and the policy that they are doing right now, that they should have been starting with the hikes pretty much a year earlier than what they are doing right now. So ultimately, it's expected that they have been doing this. However, they are currently trying to take care of inflation, in which they actually don't have that much of an impact at all. But they pretend that they have an impact on inflation, while on the other hand, the job reports coming in are not doing what they wanted to be doing. So unemployment rate might be going up due to the fact that we are facing a recession. So yes, we have been hawkish. However, what we're currently seeing is that commodity prices are dropping down, which means that also oil is dropping down nowadays, which means that the inflation most likely is in a temporary peak right now, in which the expectations are going to be, or from my side, that we are slowing down with that inflation. And that's what we also can be seeing on the yield markets or the government bonds, in which the Fed has projected to go towards 3.5% to 4% as a terminal rate. And the yields have been running towards that level. However, investors have already been selling off their government bonds as the yields have been dropping towards 2.8%. So the expectations are actually in the market right now that the Fed will not sustain this policy at this point and might be doing QE rather faster than what they have been saying in 2023 due to the fact that we are facing a recession. So if we go back into that game, I think that maybe this time we will still see a hawkish Fed, but they can't keep up with that policy. And I think that the inflation numbers will go down in the coming period. And last week we had the PCE, which was already a signal of what the inflation is most likely going to do. And those came in lower than expected. So those are all ingredients for risk on assets to start behaving again because of the fact that the expectations are that the yields will not go up and that cash will not be king and the return on risk of assets will be lower. So that's why we are currently seeing some slight strength on risk on assets, including Bitcoin.
No, that's. I mean, I have nothing to add there because there's just so much knowledge just dropped right there. Being that obviously you follow traditional assets as well as crypto. In terms of what's going on right now, if you were looking at charts without looking at, and this is kind of a dumb question because it's silly not to look at the context of situations, but if you're looking at the charts and you're trying to identify a bottom or when the trend is truly safer to start entering longs, and I'm not talking about DCAing or anything like that, but what sort of signals are you looking at on your charts to identify that the winds have truly shifted and it's something that's going to be more sustainable?
I think it's rather a combination of stuff. I mean, if I look at data, I would like to look at the macroeconomic playing field too. So I'm looking at yields, I'm looking at the behavior of commodities, etc., to define whether I can have a swing trade or investment approach. But when I'm looking at charts specifically for Bitcoin or crypto, I think that regaining the 200-week MA is a conclusion of the bear market to be relatively over, or just horizontal levels. That's where I base my trades from. But if you are investing, which most of the people are doing who are listening at this point in time, your strategy will be based on macroeconomic perspective. So then you are looking at the yields and the bonds. And some people, or most of the people that are currently getting into economics, try to focus on the dollar alone. And when the dollar is strong, Bitcoin is weak. But it's not as simple as it is as what people are pretending it to be. And that is what you can see during the past week, which means that the dollar is showing strength, while on the other hand, risk on assets are doing well too, because of the implications that we're potentially going to see weakness from the Fed, or at least a more dovish policy. So the markets are more complex, which means that you need more data to actually define an investment strategy. And that's why you're not solely looking at charts in itself, but you're looking at data points from macroeconomics or other markets to actually define your investment thesis.
Oh, that's beautiful. I see, Sammy. I think you got your hand up. You have a thought?
Yeah, very, very good points there. I mean, on the smaller time frames, you'll definitely see big deviations from the inverse correlation between the dollar and Bitcoin and other assets and so on. But I think it's longer term. Would you agree, or do you have a different opinion that you'll still generally see that inverse correlation? Weekly basis, of course, there's going to be differences, and there is that speculation, and that speculation you mentioned is an anticipation of perhaps less inflation and so on, which obviously, or more inflation, whatever it might be, that might encourage people to buy assets. But longer term, I do feel that inverse correlation is pretty strong. What do you think? I'm just curious, man.
Yeah, I agree on that. I think that when the dollar is strong and also the yields are running up, which we have been seeing the past year, but also I think we have been seeing the exact same nature in 2015 when the bear market for Bitcoin kicked in. We also had a period where the yields were going up. The Fed actually had some hawkish thoughts during that period too, and we saw dollar showing strength. Usually that's not the period for risk on assets, simply because hedge funds are taking their positions towards risk off assets because they can just generate a high return on those investments or on those parts of their portfolio. So I agree. However, it is not as simple as saying, hey, if the dollar goes up, Bitcoin goes down. It's just not as simple as that. Just like not the stock to flow model is not as simple as it is. It's just way more complex, which means that if you want to get into the market to have a proper investment thesis, etc., it's just getting more complex, which makes it more challenging, which makes it more fun to actually trade into the market.
I'm curious. I mean, there's so much. It's just like dropping knowledge bombs with all you guys on here today. I really appreciate you all being on here. And I just want to take a moment also thank everybody for listening to us here on Crypto Answered. And again, give every one of these guys a follow. Check out their profiles at CryptoVet _ what is it? Crypto Mitch NL, at Sammy Loyal _ and at The Rational Root, and of course at The Real Plan C. He had to drop off, but I want to throw it to Root in response to everything that these folks are talking about. I'm curious what your sort of thoughts are on anything that they brought up, or if there's any other thing that you're seeing with the charts that you've been working on that might be relevant.
Thank you so much, Kelly. Yeah, I mean, Michael has extreme knowledge, obviously, of the macro space. I look at the charts more from an on-chain perspective. So I don't have a lot to add to what Michael was saying. I did have some thoughts when Sammy was speaking about, for example, the Wall Street cheat sheet. Where we are in the cycle, and I shared one tweet. I think it's here shared in the Spaces conversation about the Bitcoin cycles, and there I aligned actually the cycles by the all-time high, but I took the April top because that was the hype top of this cycle. And even though we did have a distribution top, as Sammy was saying, we did not have that blow-off top. I still think it counts in terms of hype. If you look at hype in terms of on-chain, we can look at short-term holder supply. We can clearly see that the hype was in that stage, and that the top was that the April top was actually the real hype top. And so even I think the reason why we had a distribution top was likely because we had derivatives also taking away some volatility. That might have been one. The second one is that many people in the Bitcoin space are looking at all these indicators, right? So I think that might have been a reason as well to get more of a distribution top than a blow-off top. But if we align the cycles by that all-time high, we can really see that also in terms of the realized price, so the actual money that flows into Bitcoin that we can look at on chain. There's so much similarities there in the current cycle. And actually, it's incredible how aligned we are with the 2013 cycle, where we also had, and Sammy called it a suckers rally, but basically you could call the all-time high to 69K a suckers rally, because it was kind of based on conviction from long-term holders, but there was no new hype coming in the market, right? So that's why it was a suckers rally. We had that as well in 2013 around the same stage. Like after the all-time high, we had this suckers rally. In the 2017 cycle, so in the bear market actually of 2019, where he said, like where Sammy was saying, we also have this suckers rally where we went to 14K. We did not really have as clear of a suckers rally in the grind down. Like so from the all-time high in 2017 from 20K, we practically went to 6K all the way down without any substantial rally. And then there was a bit of disbelief, and we dropped to 3K, and that's when everyone capitulated. But then we had this suckers rally basically that came after making the bottom. And in this case, we kind of had it before making the bottom, which we also did in 2013. And so I think this cycle is still very much like the 2013 cycle. And that actually, again, makes me believe that we might just consolidate for this, between this 17 and 24K area for some more time, and probably until the end of the year that we will actually get out of it. For me, a price level to look at to truly believe that we're getting out of this bottom zone is the realized price. So if we manage to get back above the realized price, that would for me be really an indication that that we're kind of getting out of this bottoming zone. Now that might not happen right away. Actually, it's maybe even more likely that we'll try to break above the realized price, but people are taking profit back because they want to get break even. So maybe it will take some time. Actually, I expect it to perhaps take some months before we manage to do that.
No, that's definitely a beautiful consideration there. But I'm just going to leave it open here now. If I don't know if Michael or Sammy or Root, if you had anything that you wanted to ask each other or add, and once that happens, we're gonna open up the floor and take not a huge number, but maybe 3 or 4 questions from people in the audience. All you need to do is on the bottom left, just request to speak. And I will say, when you do come up, please keep your question or comment on the briefer side, so we can get a few people up and direct it either to the panel or to a specific person. But before we get there, I'll leave the floor open for Michael, CryptoVet. I'm not sure if you're still able to speak or not. I know you're going through airport security soon. But again, Michael, Sammy, Root, if you have anything else, any other topics you think should be highlighted or discussed, I'll leave the floor open for you guys. Well, with that, I'll ask a question. I know at different points in the cycle, people are they start to see different, more primarily Ethereum, sort of leading Bitcoin. Whether it be to the upside or the downside, or vice versa. I'm wondering if any of you, Michael, Sammy, Root, Vet, if any of you all have noticed anything in that regard currently, or do you still feel like right now Bitcoin is not only the top dog, but it's basically leading the crypto markets in that essence? Of course, it's still tied to traditional assets, but is there any sort of relevance there that you're seeing, whether it be to the upside or the downside?
Can you just go on, please?
If you look at the markets and how they tend to behave, is that in terms of crisis or in terms of recession, the correlation is getting close to 1 on everything. So that's why you see Bitcoin behave a lot with tech stocks. That's why you see the correlation with the dollar, for instance, going upwards. In that sense, I think that Ether could be a key trigger for the next bull cycle if E2.0 is going to be launched, etc. If the scalability issues are going to get fixed. But right nowadays, I think that the markets are heavily being moved because of macroeconomics, and that's how Bitcoin behaves. And because Bitcoin behaves, it gets into a nature where the USD values of altcoins are just going to move with them. However, recently we've seen more strength on altcoins than on Bitcoin, and that's basically due to the fact that leverage positions are having Bitcoin and ETH as collateral, through which Bitcoin and ETH were crashing some more, and altcoins have already been sold off quite heavy. But I think that if Bitcoin shows strength nowadays, altcoins will just follow suit, and it's not really Ether carrying the markets at this point.
Sammy, did you add something you wanted to add to that?
Yeah, I would pretty much just echo what you were saying, Michael, about Bitcoin and Ethereum. I actually wanted you to repeat the question though, because I didn't hear it very well.
Oh, it was just in regards to different stages in the cycle. We found periods, not necessarily like 6 months periods, but 3 weeks to maybe even 3 weeks to 6 weeks. I think max. We see different points in time where Ethereum will be leading Bitcoin and be a good signal for something to happen, or vice versa. And I'm curious if you're one way or the other, if you're seeing that right now, or if Bitcoin is, you're still seeing it as leading the.
I think when big things are happening in the market, when things are being defined and broken and so on, that Bitcoin will be leading the way. But I love to use Ethereum to gauge where Bitcoin might go. I find that generally they do follow each other more so. Obviously Ethereum following Bitcoin just being a little bit more volatile, so it drops a little bit harder, rises a little bit more. But when Bitcoin starts to become unclear, whether it's because of manipulation or it's just in a weird range, I do find that Ethereum can shine a very bright light on what might actually be going on. And because it's not, a micro cap, it's not a super small coin. We gotta put Ethereum in perspective. I mean, Ethereum, when it was a few $1,000s higher, was as large as Bitcoin was at price levels that I'm sure most of us in this space, we're trading Bitcoin. I mean, Ethereum got pretty big, guys. So I like to use it to gauge where it goes. But for now, I'm not expecting anything else to lead the market. I just think, obviously we're going to have little bursts where, altcoins start exploding and Ethereum leads the way. And Ethereum right now is doing pretty well. Altcoins, as Michael was saying. I don't actually understand why that speculation is there. I'm a little bit surprised if it's down to the derivatives market crashing Bitcoin and Ethereum harder, because that's what contracts are. I can understand why, but I would have just thought that it's more so the second reason you said, Michael, which is just that altcoins crashed so ridiculously hard. Their losses were on a total different level to what Bitcoin saw. So naturally, I just would have thought that they'd bounce back a little bit harder as well. But I think that would be quite dangerous to say that perhaps these coins are leading Bitcoin now, and Bitcoin's going to get pulled up by that hype. I think if Bitcoin started to rally, it would be nothing to do with the excitement in the altcoin market.
Oh no, yeah, I totally agree with that. So before we dive into getting a few questions from the audience here before we wrap out, just really quick, I'll throw it to Rational Root. I think he has something he wants to add.
Just to give my perspective on this as well. I think Michael already pointed it out quite beautifully. I think indeed, so the Bitcoin dominance is now at around 50% or so. So that is it has recovered some ground, and that is obviously due to being in a risk off market. I think altcoins are definitely seen as more risky than Bitcoin. So even some people will go from alts into Bitcoin to look for a little more safety, let's say. And so I think in that aspect, Bitcoin will keep gaining grounds as well, because we saw all these things happen within the crypto space, liquidations and so forth. that there's a little less trust in crypto, also because of the macro circumstances, but also just because of the events we have we've seen over the last weeks, and so I think that will make Bitcoin gain some more ground. Now it's true that Bitcoin is used for collateral, and therefore liquidations also affect Bitcoin's price, and therefore Bitcoin might lose some ground. But I think I tend to think that the worst of that is over. Now we might still see some further cascades of that, but if we look at Bitcoin's history, we've also had Mt. Gox in the past and all those kind of events. It's not the first time these kind of things happen. And if we look at the past, the spikes we've had in terms of capitulation were really relevant compared to other bear markets and compared to other true capitulation events, and therefore I tend to think that perhaps the worst is over, but I'm not sure.
And that's a good reminder for everybody. Is close to a bottom or already bottomed that we might have been. Whatever somebody's perspective may be, if this current cycle hasn't taught you to practice or at least focus a bit more on what your risk exposure is, what your risk tolerance is, what your timeline is, even, and what your plan is. Both directions. You can't just go all in and just hope for the best, because I know every time in the past that I've done that, I basically lost my ass on that trade, rather than in a calculated way, try to manage your risk in the best way possible. Yes, you hope in some regards, but you want to hope based on data, not just based on people say it's going to go up. So I'm putting my whole portfolio on 10x leverage, and then maybe it does go up. But I'll tell you what, every time that I've done that, years ago, the market has a very interesting way of finding a dollar past your liquidation point, and then going the direction you thought it would. So it's very, very good to make sure you have good risk management and portfolio diversity. With that, I actually wanted to throw it back to Michael on that, because on the interview earlier, Crypto Jeb asked you a question that is so important, I think, for people to remember, and that's one, having good diversity in your portfolio, and the argument that some people still make, my dad even makes it sometimes, isn't Bitcoin supposed to be a hedge against all these things? Well, not necessarily. It's supposed to be exactly what it is. Will it become a hedge in the future? Yes. But what would you say, Michael, about this idea of it being a hedge against traditional markets or inflation or whatever it is? What would your answer be about what the best practice is to actually have a hedge against these things? With diversifying your portfolio and such.
Well, it's funny enough that the mass is also saying that gold is an inflation hedge. But if it comes back to the data, gold and crypto and stocks are all an inflation hedge when the markets are going up. Very easy. Even during periods of downturns, we might not even get deflation. It's still in the period of inflation, but then there are other metrics that are taking account for the downward downturn of the market. So any asset that's risk on is doing well during some periods of inflation. So it's just a fairy tale, and you can't really base an investment thesis out of the fact that you think that something is an inflation hedge. It just doesn't add up if you want to make that investment thesis. So based on that fact, if you are clearly not interested into the markets at all, or you don't want to spend the time that we spend into the markets, you had rather have a decision to make it simple for yourself, and simplicity is key, but rather people want to use 10 indicators and to bet everything on one single altcoin. But if you want to have a lifespan on your investments, the best you could do is just diversify between several assets, which means a portfolio basket of having stocks, having commodities, having crypto, having real estate, and cash. Having all those five, in which you can just have fixed balances of or fixed percentages of those in your portfolio. This means that if something goes well on the stocks or crypto, that balance goes out of balance, in which you have too much of your percentage of your portfolio into crypto, which you can start allocating towards cash and just get your balance in proper play again, through which you're also remaining flexible during downturns. And then you don't need to bet on inflation hedges. You don't need to spend hours of research on the markets. You're just having a proper portfolio in which you can gain money and also defend money during downturns and upturns.
Oh no, that's such a beautiful thought. Sammy, what's your thoughts on this? Because I know you're obviously very heavily invested in crypto, but following you for years, also know that you've done the smart thing that a lot of people in crypto. I think a lot of people try to catch up to those that have been in for years, and they think that they don't want to take profits because they're missing out. But anybody that's been in for a while will tell you the only way you make money in this is when you have an action plan, when you make any investment or any trade, to know at what points you are going to take profits. That doesn't necessarily mean all in cash, maybe some cash, maybe long-term portfolio, maybe some into indexed, traditional, maybe some in real estate. What's your thoughts on diversification and how you approach it, Sammy?
Man, I mean, I think this is just basic financial literacy. I almost, I mean, if it were up to me and I had a community of traders, I wouldn't even let them start until they committed to, by oath, diversifying when they reach set profit goals. I mean, not having an exit plan is a horrible idea. You need to have an idea of where you're going to be taking profits, and for God's sakes, you've got to stick to it as well. Otherwise, you will lose your gains. I mean, there's like 70K down to 20K crash. It's not the first time we had it. It's not going to be the last time we're going to have something like this. And to not prepare yourself for something like this just because it's sunny in the present, or at least it's not now, but it was before, is just very, very foolish. And I mean, this is honestly, it's just one of those things where, to me, it's just totally black and white. There's not really any room for interpretation. It has to be done. Aggressive profit taking, securing what you've earned. Whether that means going back into cash or putting it into a property or throwing it in an index, or a combination, which is ideal. Crypto is an extremely, extremely risky asset class. It's probably the riskiest in the world, and so to me, it makes sense that you balance it out with some pretty boring stuff. When you've made a little bit of cash. There's a beautiful rule from a great character, Da Vinci J15. I'm sure many of you know him. He was the guy that was saying buy Bitcoin when it was $1. I'm heading into a tunnel. I think I'm his reception here. He has a strategy called the little old lady strategy, which is that every time the price of an asset doubles, he sells half of it. And if you just sit there and think about it, for how that might look for Bitcoin or but you're still making the same amount of money.
Yeah, that's I mean, and that boils back down to what Michael just said as well. Sometimes we all of us overcomplicate it. We find a new indicator or indicator package or a new influencer or whatever, and we add all this extra sort of not only data points, but we add this labor to what we're doing versus what are the basic strategies that are proven over time. One of them, have a plan. Know your timeline, know your time horizon, know what you can actually tolerate, your risk tolerance and your risk exposure. And then part of your plan has to be what's your exit, what's your take profit levels. And, the hardest part about all of it, actually, because I think all of us think we have a plan, but the hardest part about all of it is sticking to our plan and making sure that we hold our feet to the fire, that even though it's going up and the indicators still look great, we don't just let it ride because we're going to make more money. Because I know every time I've done that, the trade went the opposite direction, and I should have just taken profit where my plan was, where my projections were, and not only just taking profit, but you don't take all your profits at once. If taking profit doesn't just mean where your exit is. You have your at least primary, secondary, and third, tertiary sort of profit level. And same thing with entries, not just jumping all in every time. I'm gonna add it all right now at the because at the long run, it doesn't work the best that way. Will you get the best returns if that is the bottom? Yes, but are you gonna be able to hit the bottom every single time you trade? Absolutely not. So that's a good reminder.
You're not going to get the bottom. You're not going to get the top. You're most likely going to be horribly wrong about it. I'm sure most of us in this space got it wrong, or at least partially wrong. It's just not going to happen. And so A much better, more sustainable strategy would be, grounding yourself, understanding that you are going to miss out on some gains, but you're also going to be securing what you have. It's the only strategy that works. You gotta be realistic about this stuff.
Absolutely. Now, I want to open the floor now to if Root. I don't know if you had anything else you wanted to add before we open the floor.
Well, I kind of agree on the sentiment in general. I think I have the most trust in Bitcoin when it comes to crypto. Obviously, I think other projects are far more riskier. But I think with Bitcoin long term, everyone believes that it's going to go above 100K at some point, right? So if you invest with that mindset and you just be patient, I think there's a high likelihood that will happen.
Yeah, don't invest with a 10-year plan and then spend 12 hours a day looking at the 15-minute chart, because you're going to give yourself a heart attack. Right? So I want to open the floor to everybody. Anybody that wants to, add a comment or ask a question to anybody on the panel, please keep it brief. Either direct it to the panel or to any of the specific guest speakers up here. You can request on the bottom left portion. Make sure once I bring you up to unmute your mic. And we're happy to answer a few questions here for the next 15 minutes or so, and then we'll be wrapping out. Again, thank you everybody that's for tuning in here to Crypto Answer. My name's Kelly Kellam. You can find my info at Kelly Kellam on Twitter, and you can find any of these other speakers. Please check them out at CryptoVet _ at Crypto Mitch NL at Sammy Loyal _ at The Rational Root and at the Real Plan C. So first one we have coming up is Hamida, and we're going to bring you up right now. What's your thoughts? What's your comment or question, and how you doing today, good sir? Take it away, Mr. Hamida.
Hey guys, first of all, thank you for letting me get in the space. It's a great people here with a lot of knowledge, except Michael. I even tried to connect Michael about 1 year ago because he lives in the same area where I live in Holland. But bad enough I couldn't reach him because he's very busy. One of my questions, guys, is I started to the crypto actually in the time that it was March 21, and it was a very high. Everything was very high, and I actually spent a lot of money in crypto. I didn't buy meme coins or something. I bought Bitcoin, Cardano. Bulldog, Bolcat, a lot of Matic, a lot of things that I already get researched before to buy this kind of programs. And now it's, of course, everyone has noticed that, of course, you make a profit, but I don't know, maybe because I'm not so long as you guys with your experience here, and you see it goes well, so you start to invest more and you invest more, and sometimes you see that it goes down, then you think, okay, if it will be 30, the Bitcoin will be 30, we'll buy again, it will be 20, buy again. But at the time that you feel, okay, I put now a lot of money on it, and I have think I don't want to sell it. I don't know if this is strategy good or not, but I know that a lot of people here has a lot of experience. What is your experience? What's your advice? I think, in my simple way, that it will take about 3 or 5 years, and I think that we've got the cyclist again. What do you think, guys?
I'll leave the floor open to Sammy, Michael, Root, if any of you guys are, or Vet, if I don't know if you're able to speak. Anybody have? I have my own thoughts, but I'll let you guys go first.
I mean, I don't mind to jump in first, but as I said, I'm a bit more Bitcoin maximalist, let's say. So I think speculating on altcoins can be profitable, but if you look at the altcoin space, if you look at the top 10 coins, basically on coin market cap or something, you will see that it will change from year to year. So there are few coins that remain on that top 10. So the coins that you invest now, that you invested in, if you wait several years, there's a high chance that they won't be anymore in that top 10, for example. So I therefore tend to mostly, my portfolio is mainly Bitcoin. So I think that's the smartest choice for long term.
And one of the things I'll say to that as well is, part of the plan, part of the risk management, and it's scary to do this because sometimes you feel like you're going to get stopped out and this can go the other way. But when you enter any trade, I would say even a longer term investment, you need to have some sort of threshold in mind that where your stop loss is going to be entered. Because even if it was at 64, say you bought at 63,000 and then it dropped, but then it went back up to 69. Well, then at that point, if I didn't already, I would have found my levels based on past horizontal lines of support and resistance, and had a stop loss put in, multiple, like a 2 or 3 level stop loss. So if it did go down, that at least I would have exited my position at some level, maybe below where I entered. But then as it continues to drop, then you can identify what levels you want to basically layer back in below that stop loss level, and that way you're sort of protecting yourself. If you have a longer term viewpoint, then whatever levels that you have with available capital that doesn't take your ability to live or take your ability to buy dinner for your family or pay rent or whatever cost of living, it doesn't hurt your ability to live at whatever level you're currently living, then I look at it when it goes down. Even right now, if it goes down to 13, it hurts the bull in me, but it actually secretly, because I have a long-term vision of the promise of Bitcoin, of where it's going to go and where I still believe it's going to go, I look at those levels as, how can I find capital to buy at these levels so I can lower my average entry? I don't worry about the higher level that I bought previously. I think of this as an opportunity to lower what my average entry is.
This is exactly what I'm trying to do, even with altcoins. I try to do this with Cardano. I try to do this with Matic, with VeChain. So it's exactly the same strategy that I put on my mind, because I believe also it will be a long journey this time, because I hear from all of you about 2013. I heard about 2015. And I think that it's actually, I think also it's a cyclist, and it has to come back. And Michael was actually talking about that there is a lot of indicators that started to get now up, that it's already a little bit under control. So some things will be changed from here. So I was very curious also to the meaning of Michael.
Michael, did you have any thoughts you wanted to add to that for his question?
I mean, when it comes, there are many questions, so that's why I'm a little bit freaking out in my head, I guess. But when it comes down to investing into crypto, I think that if you want to trade, of course, the shorter your time frame is going to be, the more you're going to be fixated towards having a stop loss and towards actually having more technical reasons to why you're actually buying a certain asset, and that's when you are going to have TPs and stop losses. The longer your window goes, the less you will be using TA as a part of your portfolio balance, but the more you will be using your own risk appetite in portfolio management, which means that you're probably not going to use stop losses or TPs when it comes to an investment thesis. You're going to use your own portfolio and diversify the way you should. So if you have conviction into the crypto markets at this point in time, and you see Bitcoin at a value of $20,000, and you have also been buying into Bitcoin at 50,000 or 60,000, and right now you're feeling the pain of the markets at this point in time, it's actually one of the best periods to start looking into it, because fundamentals are just growing. sentiment is like a funeral. You're feeling like shit because you're losing value, and that is usually the period when you start to buy. So if you are looking for investment thesis or trades and you're into a position that's deep down in the water because you have made a wrong decision by your investment or you started too late, there's actually never a time that you start too late, but you have been buying relatively late in the previous cycle. If you are looking at the chart right now, you should be deleting that position that you have out of your system and just look at the chart in a way you are telling yourself, okay, if I would not be having any position at all, what would I be doing at this stage? And if your conclusion will be getting that you want to start buying a position, then probably it's time to start accumulating on, despite the fact that you're feeling shit about your position. But finally, when it comes down to altcoins, I think the primarily assets in your crypto portfolio should be Bitcoin and Ether because they have the lowest risk appetite. And when you want to allocate towards altcoins a bit more, you need more experience to actually allocate it wisely. You need more time to monitor it, to research, and then also you still need to balance it out in percentages. So if you want to get it to altcoins and simply have almost no time, maximum could be like 10% into some smaller altcoins, but you should be aware of the fact that the lower you go on the list, the higher the risk is and the higher the reward will be. So Bitcoin and Ether will be anchors of your portfolio.
It's such good advice. Thank you for that. That's really great advice, and thank you for the question there, Hamada. And I really appreciate you. I appreciate everybody tuning in here. Next question is going to be from Merjan. I'm going to add you as a speaker right now. Just make sure you unmute your mic, and curious to hear your thoughts and how you doing, Mr. Merjan.
Thank you for taking my question here. Two-part question, actually. We run a SaaS-based software subscription-based company. So my question is, the first one would be, what are the recommendations on tools to use as far as adopting and handling payments using, people paying through Bitcoin or Ethereum? We're trying to decide whether we want to incorporate Ethereum in the process or just keep it on Bitcoin. We're currently holding Bitcoin as a treasury reserve assets in our company, so our time horizon is 7 years plus. The second question is how to handle the price fluctuation since it's not a one-time payment, it's subscriptions based month to month. Thank you.
I'll leave that to any of you other business heads, Michael or Sammy or Rude. I know all of you have businesses that run. I don't know if you guys accept crypto. Any thoughts you have on that?
Yeah, I think definitely the way to go is Lightning Network. So you can it's perfect for payments and it's instant and fast and I think that would be most suitable. There's different ways to use it because you actually I don't know if you've heard of LN URL. It's a way to basically put a paywall before some content or so, and you don't even actually need a subscription base. So it allows for kind of new ways of doing business. I think that might be very interesting to look into.
Thank you. And then the other question is how to handle the price fluctuations as far as the subscription. We know 1 month it's 20,000, the second month is 50,000. As far as in the treasury, anyone has experience of as far as accounting goes? This is not a legal, I don't want any legal answers, but just in general.
Yeah, I'm not particularly. Go ahead, Sammy.
Yeah, I actually quite like the fluctuations because it means that I generally make a lot more money. Because I basically every time a customer pays me, I'm dollar cost averaging into Bitcoin. So that's a massive W as far as I'm concerned. And if you are as bullish as me, then your problem is solved before it even becomes a problem. And if you're not as bullish, then perhaps you should reconsider accepting Bitcoin in the first place, and also consider raising your prices. Because if your business won't be able to withstand those fluctuations, then perhaps you should accept Bitcoin and settle back into the dollar or whatever your home currency is, or you should raise your prices to be a little bit more, how do I say, insulated from those fluctuations. and so on. Those are just some ideas that came off the top of my head while being on the spot.
Yeah, but what a great question. And I, even with that question being posed, I know that gives me sort of indication of something I need to look more into. So thank you so much for that, Mirjan.
Thank you.
Maybe I can still add to that a little bit. I think, I mean, crypto we can divide into basically three sections, right? We have Bitcoin, which is monetary network. Then we have all the smart contract platforms, Ethereum kind of things, and we have stable coins. So basically, I mean, if you want to solve for volatility, I guess it makes sense to look into stable coins as well, right? You can probably combine something with Bitcoin and stable coins to get the kind of volatility that you can handle. So I think that's the way to do it, maybe.
Yeah. Well, thank you so much for your question, Mirjan. Definitely be looking into that, and thank you for tuning in. We're going to be taking our last question comment here, and then we'll be wrapping out. And this one will be going to Power Lightning Bolt. So, how you doing? How you doing, Power? How you feeling? What's your thoughts? What's your question? Just go ahead and unmute yourself, Power. Power, you're on. If you can't, there we go.
Oh yeah. Hey, thanks a lot, Kelly. Yeah, I just had a question about the economy. Listening to all this these macro talks lately, a lot of people are saying that the economy is going to significantly slow down. Can you guys speak on that a little bit and just give some of your insight? Like, I know that no one has a crystal ball, but what do you guys think is going to happen with the economy here in the U.S.? Are we going to see a significant slowdown with massive job loss? And if we do see something like that, like what's worst case scenario? Yeah, can you guys just speak on that?
Yeah, sure.
No, I was gonna throw it to you, Michael. Actually.
Okay, no. If I would give an advice about what's most likely going to happen with the U.S. markets, I think you should reread everything that happened in 1929 in the 1930s afterwards. I think that right now we're in a period of inflation where we're probably getting stagflation, in which the economy slows down, but maybe we can still have a gap between the real economy and the stock markets and crypto running upwards because of money just being cheap. Which creates a big gap between the real economy and the stock markets, for instance. But ultimately, if we look at how the markets are behaving at this point and what we are facing, I think the US is fucked. And I think that we're going to have, actually Europe is also fucked too, but I think that we're going to have a disastrous few years in which the crisis is going to be heavy and the actual real adoption of crypto will be happening afterwards. But job unemployment or unemployment rates in itself will be relatively high, especially if you look at real estate markets. There's a bunch of people claiming that they are not buying right now because they will be buying when the markets are going down, especially people from my age, which is like between 25 to 35. But those people are not taking into account that when the markets are going to come down fast, that the unemployment rates will go up to 10, 20, or maybe 30%, and they are not able to buy a house at all. So I think that we are facing one of the big crises ever, which is not a bullish or positive way to answer this question, but I think it's reality. But ultimately, if you start educating yourself in the financial systems, and the more you start exploring that, the better you can actually protect yourself for any downfall that's going to happen or that's going to come around.
Yeah, I mean, I couldn't agree more with that, and I think it's important right now. I think a lot of people are starting to realize that, especially in the Bitcoin market, all these metrics that have never been broken before, or points that have never happened before, like breaking past the previous bull cycle's all-time high, or on-chain metrics being lower than they've ever been before, and everybody's trying to really figure out what's really going on. I want to. I'm prefacing this because there is a tweet that I shared up in the top, and it basically shows the years that we had terrible first half of the years that were followed by incredible rebounds the second half of the year. While that has happened in the past, I don't necessarily think that is the absolute case that is going to happen this time. But what it does point to, and what it does remind us all, that as bad as things are right now, whether it's in 2 months from now or 2 years from now, markets will recover. So it's a good point to keep your head down, keep your spirit up, and the title of the interview that you did earlier, Michael, was basically about the bear market's a time to build. And as scary as this is right now, everybody gets so excited when the market's at all-time highs and new money's piling in, retail's piling in. People are so excited, but it's kind of bizarre that when markets are essentially when you have more years of experience in this, people realize these markets aren't necessarily low for good projects that have good value, that have some sort of a longer term plan, a longer term prospect on them. These prices are essentially below fair market value right now in that context of investing. And so right now, anybody that was excited at 64, now is the time where it's like, okay, maybe you're underwater on a purchase you bought then. But just like Michael said, you sort of ignore that purchase and you look at the landscape of what's happening right now, because right now, if you were excited at 63, you should be really excited at the levels right now, and not necessarily throwing all your money into it, but identifying what your plan is, identifying how you're going to take advantage of this. Because people that make millions of dollars in the bull market, they didn't buy the top of the bear market. They started finding their entries very low in a bear market when everybody's scared. So that's definitely a good point to sort of end this conversation on. But before we do that, I want to throw it to I don't know if CryptoVet is able to speak, because I know he's in the airport. But I'll give him an opportunity if he wants to chime in. But also Michael Vanderpope, Sammy Loyal, Rational Root. Please give all these guys a follow. And thank you everybody for joining. If Michael, Sammy, Root, if you guys have any last words of encouragement, or any last sort of points you want to make before we wrap out.
I think the main thing I want to jump in and say is do things by the book. Do things as though you have. There's a beautiful book called Market Wizards, written by Jack Schwager. It's an interview of top traders around the world, and it just interviews them mostly from a psychological point of view. If you read a book like that and then religiously follow what these, some of the best traders in the world say, you're going to do well. Don't look for shortcuts. Do things by the book, and you'll be surprised at how quickly you make money. That is something I live by now.
Oh, yeah, that's such a good piece of advice. Well, with that, unless anybody has anything else they want to add, I want to say thank you to all the guest panelists. I want to say thank you to everybody that spent their Thursday afternoon or evening, depending on where you're at. Really appreciate you all. Give all these speakers a follow. They all share a wealth of information just out of the goodness of their own heart. All wonderful, additions to the crypto environment and community. So thank you so much to everybody that's tuned in here on Crypto Answered. My name's Kelly Kellam, and we will be seeing you again next Thursday. Have a wonderful weekend.